The fact that ETFs are resolving issues with reporting, compliance, accounting, ease, and credit availability is where their true value lies. Furthermore, it stands to reason that each city and country on Earth will have its own unique one. If the Saudis are serious about keeping Bitcoin in their country, they will establish an exchange-traded fund ETF in Riyadh, Dubai. In my opinion, every country will have an ETF. They would prefer that you not withdraw money from Argentina, for example. Their best bet would be to invest in an exchange-traded fund ETF based in Argentina, where they could keep their Bitcoin. After starting to buy Bitcoin for his company in August 2020, Michael Saylor, co-founder and executive chairman of software analytics firm MicroStrategy, became a famous Bitcoin bull. Despite the U.S. Securities and Exchange Commission's approval of multiple spot Bitcoin exchange-traded funds (EPS) earlier this year, Saylor's positive attitude on Bitcoin has only grown stronger. Saylor emphasized the immense significance of this ETF to the entire network in a March interview with Natalie Brunell, saying that they had made a world of knowledge, opportunities, and functioning accessible to 99% of mainstream investors. Saylor delivered a compelling talk at the Bitcoin Atlantis conference in Magdara, Portugal, where he further outlined his optimistic perspective and made other bullish forecasts regarding Bitcoin. The vendor emphasized that the authorized ETF could hold its own against the SP 500 ETF. "We believe Bitcoin might compete with gold," he said, "but now it's risen to the top of the rankings and is beginning to trail the SP 500 index ETF." He was certain that Bitcoin's value would reach new heights as it would be adopted by every home, institution, and nation. Saylor is still very positive on Bitcoin and the spot Bitcoin ETF, even if there has been some buzz about it because of recent market fluctuations. In an interview with Effort Leave Me, Saylor mentioned that BlackRock and other U.S. spot Bitcoin ETF providers have started a snowball effect that will change the world of investment in the next years. The Bitcoin network is home to the ETF, so because they improve Bitcoin's value and address the following issues, they play a significant role in securitizing Bitcoin. Buying from them is more convenient. Anyone can call in and declare, "I want 10% of my assets to be in Bitcoin," even if they're 70 years old and a retiree. Spend the following 7 days buying it at the going rate, done in 7 seconds with just one phone call. No money needs to be wired because the accounting systems, risk controls, and compliance controls are all operational. The individual who answered the phone also receives compensation. The funds to purchase it could potentially be accessible through loans. A down payment is not required to purchase it. Assuming you have $1 million worth of Apple stock, you could call your broker and request a loan to purchase $100,000 worth of Bitcoin. In the end, you would pay 5% interest for an investment that is currently yielding 50%. Thus, it addresses both the convenience and credit issues. It takes care of the issue of custody as well. Concerning the identity of the caretaker, you should not fret. An agreement for the exchange of cryptocurrency is not necessary. A custody agreement cannot be negotiated. Making the switch to Bitcoin is unnecessary. Learning the Bitcoin network is not necessary. That is not something you need to be concerned about. Hence, it's lots easier. Additionally, it streamlines reporting and accounting by integrating all of your financial statements. Additionally, it is not uncommon for customers to have maintained a 30-year relationship with the same bank. As a result, everything is neatly lined up. Everything has been precisely calculated. Furthermore, if I purchase Bitcoin on 18 separate occasions, I will have 18 separate bases. They will keep track of these bases so that when I sell anything or give it to my children, they will accurately account for my taxes. That concludes the accounting and reporting problems, and each of those is really essential. However, the compliance issue is also resolved. Upholding regulations and managing assets. After exchange-traded funds ETFs were greenlit in the United States, a slew of large-scale investors, including pension and hedge funds, poured $50 to $200 billion into them. Despite their substantial wealth, they were limited to purchasing through the ETF. They are not permitted to work for an additional 12 months in order to establish all of these other systems. They aren't allowed in their charters. Accordingly, they are facing an issue with compliance. What followed was the Hong Kong launch of an exchange-traded fund. Buying Bitcoin through that Hong Kong ETF means that your cryptocurrency will not be physically held in a U.S. vault. Custody at a Hong Kong-based regulated bank is preferred by the Hong Kong financial system. That being said, suppose I am an investor, institution, or business based in Hong Kong. Using the Hong Kong exchange-traded fund, I could invest in Bitcoin. Rumor has it that mainland China will soon have exchange-traded funds. A Shanghai-based financial firm will provide you with the ETFs, and a mainland Chinese bank, possibly. In Shanghai, will hold the Bitcoin. 1.5 billion Chinese citizens are interested in purchasing Bitcoin. If they get wealthy, the Chinese authorities will not stop them. It has no problem with China being wealthy. Pounds are liked by all. All of them enjoy affluence. Their main concern is that individuals should not be able to withdraw more than $50,000 a year from accounts outside of China. Consequently, the capital controls would be broken if someone were to purchase $10 million worth of Bitcoin stored in a hardware wallet and then depart the nation. However, if you invest $10 million in Bitcoin through an exchange-traded fund ETF in Shanghai, and the exchange buys the Bitcoin and costs it in China, China's banking system, currency, culture, government, and investors all win. The true value of exchange-traded funds ETFs lies in the fact that they address issues related to credit availability, regulation, accounting, ease of use, and reporting, and one would assume in every city or country on Earth. If the Saudis are serious about keeping Bitcoin in their country, they will establish an exchange-traded fund ETF in Riyadh. We may maintain one in Dubai, Abu Dhabi. The Emiratis will think, how long will the avalanche last? Already there are 34 people who possess more than 1 million Bitcoin. A spread will likely persist, in my opinion. In my opinion, every country will have an ETF they would prefer that you not withdraw money from. Argentina, for example, the obvious choice for them is an exchange-traded fund ETF that stores Bitcoin in an Argentine bank. However, as this is taking place, you can observe that the price of Bitcoin in New York will drop as the Chinese purchase billions of dollars worth of Bitcoin. Alright, so there's simply another application. One such use is ETFs like MicroStrategy, Cash App, Strike, and other mobile apps. Businesses operating on the Bitcoin standard are applications. Coinbase and Binance are examples of cryptocurrency exchanges. They serve as an application. A lot of people will start including it in their retirement plans, insurance policies, and mutual funds over time. Added uses. Every single app is after Bitcoin. Because these are the capital markets, every program wants a piece of Bitcoin. We call this capitalism. Finance is essential for any business. The foundation of our culture is money. For how much? A capital of $400 trillion. All of humanity's wealth is worth $900 trillion. Either monetary premium or pure economic energy must make up half of it. Money is what everyone is after. No one can do without it. Capital is essential for every public and private organization, including but not limited to governments, schools, charities, religions, families, and businesses. Therefore, Bitcoin will just explode in value. It is the pinnacle of monetary unity in a way. It's an online cooperative bank. The strength of the network and the value of individual assets are both increased as more people join. Plus, their combined power increases as the number of members grows, the same way that a union can be quite powerful if every worker in the country becomes a member. So can a country without a union? There is no use in becoming a union member if no one signs up to be one. The basic premise is this: what if, instead of putting our labor into a union, we invested our money? A monetary union, not a labor union.